Hi, welcome back to another very, very exciting episode of Next Big Fin. Very excited to bring in some amazing entrepreneurs today in the crypto space. Where, crypto is a very new space for us. We have not done a lot in that space. And also bringing in Omar, who you have met previously when we did his intro episode with you. This is a co-hosted episode. So I will get started with one of the co-founders, and then Omar will take over. Without taking too much time, Patrick, welcome to the show. I love the work you are doing at Chain Argos.
Thank you, Laksh.
And, an amazing journey that you have had. Heard great things about you. Now, our audience would love to hear from you about your journey. How did you end up here? And, a little bit more about your work at Chain Argos.
Okay, so that's a couple of questions that we'll have to unpack. I mean,
yeah, exactly.
Every founding story is slightly different. I've been involved in the crypto asset space for a while. I was previously a corporate insolvency lawyer, and I was at a party once, and I remember there were a lot of these people who were telling me things because I can speak Hokkien. So they were telling me things. I remember thinking that the stuff that they were telling me sounded inherently legal. So I had an inkling that this was not going to end well for a lot of them. So a friend of mine asked me to write an op-ed in his magazine, and I did. And it was a fun piece. And it was basically talking a little bit about the party, talking about the social stuff going on in the crypto asset space with these guys. And this was a long time ago when there was quite a bit of money pouring into the space. And John had read the article, and he could read between the lines, and he knew some of the, I don't want to say conspiracy theories because they all turned out to be true, but some of the theories that I had behind some of the things that were going on. And he just out of the blue, he pinged me, and he found my contacts on LinkedIn, I think. And then he pinged me on LinkedIn and said, hey, I think I might be able to prove some of the stuff that you kind of instinctively know, but have no means of proving. And so that's where we are. So a bit of background about Chain Argos for those of you who are not sure what the company is. We're a blockchain intelligence firm. We're the ones who are most famous for unveiling that Binance's BUSD smart BUSD stablecoin was unbacked by about as much as $1.4 billion. And we do a lot of investigative work. We primarily use the blockchain data, and we prepare in such a way and analyze in such a way that it's able to be used by people who are trading, people who are doing compliance, people who are doing investigations, and people who are doing regulatory sort of work.
Great origin story. Now, let's get into a bit of the origin story.
Yeah.
You were not the first player in the blockchain intelligence space.
No.
Not at all.
Not at all.
And I'm not a big believer in first mover advantage. I think there is a first mover disadvantage for sure. Why would you get into a space which already had 2 or 3 major players at that point of time?
So that's a good question. We saw that we shouldn't be discovering a lot of the stuff that we're discovering. We shouldn't be the ones who are making all these headlines in the Wall Street Journal, Fortune, Forbes, and stuff like that. We shouldn't be the ones who are propelling these headlines because, as you rightly point out, there are companies who have a much longer history of being around. Yeah. And if there were to be instances of fraud or malfeasance, they should have been the ones to have found it out. They should have been the ones to expose it. So one of the things that was strange to us was that, why is nobody pointing this stuff out? When John and I started working on this, we were primarily looking to prepare trading signals for people who were in the trading space. People were looking to profit from sort of information gaps and stuff like that. So, and market data that, that had price information. So when we started to keep, hit after hit after hit, and uncovering stuff that we just assumed somebody else would have been looking to and somebody else should have discovered, we realized that there may be a chance that everybody else isn't doing it right, or they're not interested to do it. And that's why we decided, hey, I think we might have, a business here. We might have something on our hands that could be of great value to people.
That very interesting insight, because you're right. If there are all these firms and they were doing it well, then you should not be.
I should be the one. Yeah, absolutely.
Finding great answer. One of the things you're really famous about, and this is, I think, the time that you really shot to limelight was when you uncovered stuff with Binance.
Yeah.
talk us through what happened there. What did you uncover? Walk us through that. That would be really interesting for us to know. As much as you can share, obviously.
Of course. So, and even to this day, I think it's something that people don't fully appreciate. So when people say that there's a token, they just assume that token exists on a couple of blockchains and stuff like that. So with the Binance BUSD stablecoin, and stablecoins have become an extremely hot topic these days. There was a BUSD stablecoin supposed to mimic or be backed by sort of the functional equivalent of a dollar.
Yeah.
And that was issued by Paxos Trust LLC, which is a New York registered trust company. It had some kind of a bit license. It was licensed to issue this stablecoin, but it was only on the Ethereum blockchain that it was licensed to issue that stablecoin. Its partner, and was characterized as a marketing partner, was Binance, the crypto asset exchange. And so whilst BUSD was being minted on the Ethereum blockchain, Binance said, hey, I also have this other blockchain of my own that's called the BNB Smart Chain, or BSC for short.
Yeah.
I would like to make this BUSD available on the BSC. So I'm going to take BUSD from the Ethereum blockchain and kind of like lock it away in a contract, and then I will mint the 1.4 backing. So I'm taking a stablecoin from one blockchain, I'm wrapping it and making it available on a different blockchain. Now that's one of the idiosyncrasies when it comes to this technology, which is that stuff that's on one blockchain can't communicate and can't be transferred across to another blockchain. So you have to do what's known as a bridge. And so of course, when you do that, the labels are still the same. It's still called BUSD. Now this is BUSD on the BNB Smart Chain. And from an end user's perspective, okay, this should be the same or treated as the equivalent of the BUSD on the Ethereum blockchain. So, of course, now we know that what they'd been doing was they had locked an amount of Ethereum BUSD on Ethereum, but they had minted far, far more on the BSC. And you can see how that would generate price signal. Because now you've got a whole bunch of like literally free money because it's unbacked.
Yeah.
And you could use that to sort of like pump up any kind of token that you wanted on that chain. We're not saying that that's what happened, but there was a strong correlation between periods of the creation of this unbacked BUSD on BSC and a sharp increase in the price of the BNB token, which is the native token of the BSC chain and also owned primarily by Binance.
Right. And that is, I must tell you, 24, 25 episodes in, that is the most riveting story I've heard.
Okay.
Thank you for sharing that. And this is amazing, And what happens is that the case that you just shared, and there have been a few different cases like that literally scares off the traditional finance side of things, the banks, the asset managers, etc. and stuff. So now, if you were sitting in front of a traditional bank and I was their CRO, the chief risk officer, what are the 4 or 5 different things you would ask me to look for as red flags in any of these ecosystem providers?
Well, I think the first question I would ask before we even got to the CRO would be the business officer would usually recommend doing something along these lines, or the business development guys. So to the risk officer, I would say, what is the business case that we are managing the risk for? In many of these sort of tokenized experiments, if you could call them that, I don't necessarily know that blockchain or tokenization necessarily makes it better. In some ways, in many cases, it makes it much, much worse.
Okay.
So if you have but that's not to say that blockchain technology in general has no value and stuff like that. We've seen that there are good applications in supply chain when it's heavily permissioned, heavily supervised, heavily overseen blockchain application for financial services. There is an increase in efficiency. I think where at least I personally am struggling to see how there's an economic good without a serious social ill is especially in the permissionless space.
Yeah.
when you allow the permissionless transfer of value, what inevitably happens is that you'll always be a couple of steps behind in sort of stopping illicit flows and stopping the bad guys, so to speak, because it's not like how people would think about a regular bank account, for instance. You know, you and I couldn't go to a bank today or 200 different banks and open accounts. We would get stopped out pretty quick. And I couldn't go to one bank and open 200 bank accounts either. So, but on these permissionless systems, these blockchains, it's trivial to kick off like 200 addresses. I can automate the process and stuff. And each time an address gets flagged as having some issues, it's not difficult to just spin up a new one, a fresh address, and then, you know, keep running a couple of steps ahead of those who are seeking to police this space. So I think to the CRO, it would be a multi-step process. First, let's understand the business case and really understand, does blockchain really make this better? In some cases, yes. And in many cases, no. So if it does make it better, let's say, for instance, you want to free up liquidity, there's some business case or some revenue case that you've designed that, you know, I'm not saying that there aren't new ideas. Of course, there'll be new ideas out there that could suit this. And if that's the case, then let's look at the risks. And the risks are, do you have a strong, like, sort of guardrails? You know, do you have a strong permissioning system? Is it like a whitelist only? Whitelist meaning that only certain participants that you've identified could take part in this ecosystem. And we see some banks doing that, which is fine. You know, that's one way to manage compliance. But if you're thinking like, hey, you know, we could reduce our compliance costs by just making this stuff permissionless, then you're going down the road to perdition, you know? So
yeah, okay. Very, very interesting answer. You said something there which kind of resonates with me. DeFi is not always going to make things better.
Yeah, so that, I think it depends on what you mean by better.
Yeah.
Yeah. So what is it that we're trying to achieve? If the goal is to facilitate permissionless transfers, it does a hell of a good job of it. You know, permissionless trading and stuff like that. But if you're saying that now DeFi, which functionally operates the same sort of systems that financial institutions and banks operate, except that financial institutions and banks have significant compliance burdens and regulatory requirements. And now you're saying that because it's somehow allegedly decentralized, you don't have to comply with all of those rules, even though you're kind of providing the same functions. Then now we have to make a decision. Is that what we're going to go with? Because it's not fair to the banks and the financial institutions to say that, oh, these guys, they don't have to follow the rules because they're technology providers. I think that there would be a lot of financial institutions that would disagree with this characterization. You know, if you are providing financial services of a similar quality, well, not quality, but of a similar nature and function as that of a bank or a brokerage or a financial institution, then you should have to fill out the forms. You should have to do the KYC. You should have to do the AML and the sanction screening and all of the compliance burden that, and you can't just say that, oh, it's decentralized, nobody's in charge.
Yeah. Absolutely amazing. And, you know, because this resonates. If you are going to provide financial services, whether you do it via technology or a physical branch or anything, you should be set to the same standards, same rules. And you deal with both traditional and DeFi space folks, right? What do you think the decentralized finance or crypto guys, etc. guys, you know, they are getting wrong about financial industry?
I think they're getting a couple of things wrong. First of all, they use the term decentralization and open source pretty loosely. They don't mean the same thing. You know, open source doesn't mean decentralization. Decentralization doesn't mean open source. Yep. But to make matters worse, many of the projects that we've been tasked to investigate are not really decentralized. There usually is some kind of controller, and I'll give you a little bit of I'm not just going to make bold assertions like that. I'm going to give you some information. So software, as you know it, whether you own a Windows laptop or a Mac or something like that, a phone, it updates regularly, right? Because every now and then it says, hey, we need to shut it down to run an update. And that's because software evolves, you find new bugs, maybe you find more efficient ways to do things, and you have to upgrade the software. So I would say the majority of all so-called DeFi, decentralized finance projects are aspirationally decentralized. So because when they're starting up the project, it has to be centralized because they have to control all of the stuff. Otherwise, it would just kind of run loose. And then the idea is, of course, that they would eventually branch out and devolve themselves of control over the system. Yeah. Now, the issue with that, of course, is that it's software, right? Software needs to be upgraded. So, even if you don't know anything about software, would you be comfortable to say that today I've written the best piece of software code known to man, and it shall never be improved thereafter, and it will always be static? No, of course not. So oftentimes what you'll see is that they'll have special administrative powers, like special overriding powers, and it's not going to be immediately apparent to you just looking if you don't understand how all the software operates. And to you, they tell you it's decentralized. You don't have any way to check if it's decentralized, and so okay, you take their word for it. But in many cases, it's not. It's usually controlled by a handful of people. So if it's really controlled by a handful of people, what does that look like to you? Kind of looks like financial services from financial institutions because it's controlled by a handful of people. Yep. It's centralized. So I think that's the thing that you have a whole bunch of people who are knee deep in doing the code, which oftentimes isn't nearly as sophisticated or as complicated as the stuff that happens in a bank or a financial institution. And then these guys don't fully understand the implications of the things that they're doing. They don't fully understand that the financial services they're offering as a consequence of the software that they've created. And those are things that are not going to end well.
Yeah. And that seems to be a problem that a lot of tech startups had initially when they were building fintechs. They understood tech really well, but not really finance. And they were like, yep, we'll disrupt finance, but not really. As soon as you hit the core legacy infrastructure, you hit regulation, etc., you realize that disruption is not as easy. But it has happened. And, and let's take the other side of the coin now. What is one or two things that the traditional banks, regulators are misunderstanding about the DeFi world?
I think, again, it goes down to the concept of decentralization. Regulators tend to be attorneys or people who don't deal in software.
Yeah.
And software can be scary for people who aren't familiar with it. And one of the first things I would say is that the code isn't that complex. If I can understand it, most people can. And you just have a look at it and you will realize that most of the code functions are kind of intuitive. If you read it, you understand what a function does. It kind of makes sense. This is not particularly complex or sophisticated code. And there's a reason for that, of course. It's because once you upload that code into the blockchain, it's immutable. Some data points can be changed, but the way the software operates is immutable. So the thing about, because when you are fearful of something because you don't understand it, then you may be concerned about, not appearing as ignorant or not asking the right questions. And if you don't receive proper information, there's a lot of misinformation out there.
Yeah.
One of the things I was extremely concerned about was somebody had said recently that, oh, you don't need to go to college. All the information you could ever need is on the internet and YouTube. And we know how dangerous that is, because if you'd be injecting bleach to fight COVID into your veins and stuff like that. If you don't have a base level of fact that we can all agree on, that's been objectively proven, statistically analyzed, then there is a risk that you're going to get bad outcomes. So I think when it comes to regulators and lawmakers and authorities, they don't fully appreciate the idiosyncrasies of the technology, and they don't fully appreciate the implications of the things that people are doing. I think that that's changing. We can see a move forward, but it's going to take time, and it doesn't help that this industry that is replete with jargon and terms don't have fixed definitions. As a lawyer, you want one of the first things in any contract is an interpretation of all the terms. And even that is not agreed upon, and that causes a lot of headaches for people who are supposed to be supervising these things.
So, Patrick, great answer. Let me ask you a question here. Let's say you become the CEO of the biggest crypto exchange in the world.
All right.
What would be the first 2 or 3 decisions you would take to bring in more trust and transparency into this space?
First of all, I have to ask what series of poor life choices I made to end up in that situation.
Yeah.
But okay, I mean, jokes aside, we have seen that it is possible to some extent for a crypto asset exchange to operate in a compliant manner. They do exist. Now, I think that there is a temptation because you see that on DeFi, for instance, they're not held by such strictures, and in some ways, the easier it becomes to access DeFi, the greater the question becomes. Why do we need centralized exchanges? But there will always be a very strong segment of the population who wants to trade these things, who needs the protections, the user interface, the customer support of a centralized exchange. I would say that if you really want to put on your big boy pants as a crypto exchange and to run this thing, then it's not like there aren't blueprints as to how to do it. If you want to be the equivalent of the New York Stock Exchange for crypto assets, then operate to that standard. So increase the compliance functions, increase the oversight, increase the supervision, increase the audits, and use the blueprint that already exists. Because functionally, whether or not you're trading crypto assets or you're trading stocks and shares, they're the same. We've somehow come to the situation where we're now arguing about things like, is it a commodity? Is it a security? Reality is that whether you're on the CME or whether or not you're on NASDAQ, they have the same sort of standards and rules and, in terms of compliance and making sure there's visibility. The minute you're handling money that's not yours, you should be able to, and you should be open to subjecting yourself to that level. So I think if I were in that unfortunate position, that's what I would do. I would increase that compliance function, but that obviously is going to eat into the business. And, that's just the reality of it. I think it's a tough job. I don't necessarily know that that's, it's not going to be easy to do that.
Very insightful, a lot of depth into that answer. You shared a little bit about your work previously, which was, very well appreciated across. Talk us through a few examples of your work where you saw something, and obviously which is publicly available, which was completely mind-boggling to you that something like this could exist or happen in 2020-ish, whatever time frame it happened.
So we deal primarily in market data.
Yeah.
So we take all the blockchain transactions and we prepare that data for use for whatever you want to use it for. So one of the things that we stumbled across in testing out the tools, which I thought was a little bit strange, was the discovery that, and we did this, and it's a South China Morning Post piece. One of the things that we didn't expect to see was all of these different illicit actors using the same sort of service providers. So, for instance, it's not like there's this massive conspiracy, at least I don't think so, where you have the North Koreans sitting at the table and you have all the terrorist groups sitting at the table, the drug dealers, and everybody meets at the swamp in the Legion of Doom and says, hey, these are the money laundering services that service providers that we're going to use. And this is how we're going to clean all our illicit money. So let's all agree. Yeah. Okay, good. I just don't think that's the case. I mean, I could be wrong. Maybe there is a Legion of Doom. So, a case that we did not too long ago with the South China Morning Post was interesting in the sense that we were able to link these operators of scams with what looked like sanctions evasion, with what looked like terrorism financing, and looking just purely at the transaction data and having no other information away from the blockchain, we noticed that all of these flows tended to overlap, like in a Venn diagram, with a couple of service providers. And we don't know who the service providers are, but we know that they're service providers because if you look at the transaction activity and the address and the flows of funds going in and coming out, you can tell it's a service provider. Right. And it was this uncovering of unexpected relationships that really surprised us. And again, it went back to my earlier point, which is that we really shouldn't be discovering any of these things. I mean, you would have expected that, people who are in law enforcement, national intelligence and stuff like that, they should have been the ones who discovered these things, but somehow we'd stumble across it. And that was strange to me. And just as, and I guess it is a little bit naive if you think about it, because the rest of the world has interconnected. It's gone global. Why would we assume that all of these illicit actors act in silos? Why would we assume that the terrorists wouldn't use the same services as a drug cartel? Why would we assume that? There's no reason that they couldn't both use that. And just as you've seen banking as a service and stuff like that in the fintech space, why would we assume that money laundering as a service doesn't exist? And now we found that transaction proof. So that was an interesting one that we looked at.
Okay, and really interesting. And you coined a new term called money laundering as a service. That was
I don't think I coined that term. I think it's a thing.
It is a thing. Okay. Now FBI did something very, very interesting very recently, where they spun up this website. It was the FBI.
Where they tried to procure the services of people who are doing wash trading, basically market manipulation.
Yeah. Walk us through what FBI did. Why is it so out of the box? It got a lot of attention on the social media spheres. Walk us through what happened there.
Well, in that case, and I'm not super familiar with it, but as far as what I understand, they kicked off the token, and then they went around shopping for people who would provide wash trading as a service, essentially just market manipulation in what looked like some kind of a sting type operation. Once they procured the services, they did the wash trading, pretty standard wash trading, and then they arrested everybody.
Oh wow!
Yeah, so that's in a nutshell what it was. This is not new. I mean, like providing wash trading services is not new. I
But how discoverable it is, because if this is wash trading, I'm assuming these are few addresses which are doing all the trading.
Oh, and it's moved on. It's moved on quite a bit from that.
Okay.
Yeah. So, but you can tell because, and we analyzed this, and we'll be producing a report on that pretty soon. But you can tell because the overall volumes and stuff like that don't breach a certain level because you have like kind of essentially a service agreement.
Yeah.
So you notice that, hey, why does it kind of cap off that way? And then if you put them like cumulatively, like the number of transfers and stuff like that, because again, service agreement, right? You promise a certain number of trades and stuff like that. If you put it cumulatively, you'll notice that the slope of those trades are linear and it moves very smoothly from the bottom left to the top right. That doesn't happen in real life.
Yeah.
If you go and look at NYSE trades and any kind of real market, it's all over the place. There's a lot of randomness and a lot of stuff inside. Whereas this thing is, you can see that. And you see that a lot in this space. So it's not just this specific instance of manipulation, which was sort of commissioned by the FBI to nab these guys. But yeah, you see that.
Okay, and my last two questions for
Sure.
you. First, what is one regulation that we could bring in globally that will make this space safer, more open, financially inclusive for everyone?
Well, first of all, let's not assume that everybody who's in this space, who's dealing and trading with these assets, is necessarily with nefarious or malicious intent. So one simple, very simple regulation that people could bring in is the requirement to disclose the addresses that are associated with you if you want to get banking services. I don't think that there is one single overarching rule. I think it needs to be a framework of rules that are in the spirit of compliance. So let's say, for instance, the most difficult leap for people in this space is getting from crypto to fiat, like money that you can spend on Lambos and mansions and stuff like that. And if you want to make that leap, then because now you're entering to the space of financial services, you want to say, yeah, you don't need to be regulated. Fine, whatever. We can have a discussion about that. But the minute you cross over to financial services or you're providing some kind of, you need to, I think the most important thing to get more, I mean, whether it's confidence or participation, but you need to harmonize those rules. So it wouldn't be a single rule. I'd say that you need a harmonization of these standards. We shouldn't be able to hold people to a different standard simply because they throw about the term decentralized.
Great answer. The crypto world has gone through a lot of change.
Yeah.
Started as a disintermediation tool against governments, regulators, etc. Now it is in a dependence mode where they're looking for more financial institutions to come in. It has had a couple of very tough years with all the stuff that has gone on with these major exchanges. Where do you see crypto in 5 years from here?
That's a good question. I think that there will be, so if you look historically, we've seen situations like this in the past, and that generally provides us with a good guide. So in the, I think, 80s and 90s, you had the savings and loans crisis. Then you had a lot of insider trading during the hedge fund era of the around the 90s and 2000s, and then you had the subprime mortgage crisis of the 2000s, 2008s. So this kind of to me looks a little bit like what offshore finance looks like, and that will always exist. So, interfacing retail and stuff like that is probably not a good idea, because that's how a lot of people lose their money, and that's how people get upset. People get upset. They express that disappointment at the ballot box. Politicians get interested. They put their foot down on law enforcement. They clamp down things. So I think 5 years from now, it's going to look very different from what it looks like today. Today, there's a lot of retail participation. There's always a lot of discussion about trying to get more numbers in and get more retail participation. But I don't think that that's what would be the end state. I think that it's going to both increase and shrink in size. And what I mean by that is that it's going to be a handful of much larger institutional players who are engaged in offshore finance, which they're doing anyway as well. And as a tool for offshore finance, this stuff works.
Yeah.
So, but then the retail participation, all that stuff, like, naming of those sports arenas and the FTX types, those should probably disappear.
Great answer. This has been a very riveting discussion. There is very few times that I'm almost on the edge of my seat, and this was one of those instances. Thank you so much, Patrick.
Thank you, Lash. Thanks for having us.
So, welcome to today's episode. We get to spend quality time with John Ryder, who is the CEO of Chain Argos. Jonathan, why don't you tell us a little bit about yourself?
So I was a rates and FX options trader for a long time. Pre-2008, post-2008, and got sort of bored of that, such as it is. And I like math, so a bunch of sort of finance-related math things for a while. And then met Patrick through I think he talked about the earlier portion of this. he'd written some borderline conspiracy theory stuff that turned out to be true. And I thought, oh, I think we can detective that one out. That seems like a good challenge. And it's just been a fascinating process of applying tools to solving interesting finance stroke research problems ever since then. So it's try to stay looking at something interesting. Right? Keep interested, don't get bored. That's the
borderline conspiracy theories. That's like the key word in crypto, and they're not all borderline. Some of them are even better than others.
There's also some lunacy. Yeah, no, there's a wide spectrum of it.
What attracted you to the industry, and in the first place?
Okay, so I was first asked to look. So this is the first sort of serious work recently. We'll ignore long time ago things at some derivative pricing sort of design things. So I had done derivative quant pricing trading work of various guises for a while, and sort of designing. Somebody wanted to build a interest rate swap protocol and an underlying interest rate settlement mechanism that would sort of function like a LIBOR SOFR type thing as a benchmark. And we went through trying to design that for a while, and one of the issues kept being there's no risk-free interest rate. Nobody's got. There's no scheme for risk-free interest rate. Okay. So after a while, I thought, look, designing this kind of weird trading scheme was my job for 20 years. If I can't figure this out, maybe there's just no way to do this.
Right.
So I ended up enlisting some academic guy I went to grad school with and a friend, researcher, professor here. And we sort of worked out that you couldn't in fact do that. And from there, this was something published quite a while ago about general sort of risk-free impossibility, decentralized systems. From there, I began looking at the ways in which the assumptions people had made designing markets and products were faulty, and how that could be, I guess exploited is the formal word, right? How you could take advantage of that for trading, for whatever, for all kinds of things, obfuscation. And that kind of morphed into this effort where we're kind of trying to provide tools that help people get the right answers, trading answers, investing answers, whatever answers, based on sort of that more rigorous level of understanding. Because you have these permissionless systems, and if there's a flaw, it will be found, right? As my old boss, I think everyone in finance's old boss has said something like this. There's a weakness in the portfolio, the market will find that weakness, right? If there's a flaw in this thing, the market will find the problem. So you might as well be able to find the problems and defend, attack, whatever you're trying to do. And that's always fascinating, right? As long as it keeps changing. And it's a space in which people can generate new tools so quickly that there's always something interesting to look at. Some work, some don't. Markets are normally about, the people on television are about the stuff that works. The people actually doing the market's work are about the things that are broken.
Right.
That's always the way this is, right? Every trading floor is about the problems. Every CNBC interview is about the fantastic promise of the future. Okay, right? That's fine. There's nothing wrong with either one of those perspectives. You need both sides to.
I agree. So look, I mean, you and I are both TradFi guys that find ourselves in the crypto space, right? What would you tell other people looking to get in the space? Would you recommend they come into the space or stay away?
I mean, there's a lot of interesting work to be done. I think it's important. So for people who want to do a markets side thing, I think it's different than people who just want to do business things in general, right? Because if you're doing something like sales, business development, fundraising, promotion, that side, it's an industry. So, okay, you see if you like the people in the industry, do that stuff in the industry, right? For markets things, there is definitely a strain of people who believe that these markets are somehow different than other markets. All markets are the same, ancient Greek commodity markets would probably be vaguely familiar to us. And it's useful for people to have some experience in regular markets, more because you're more likely to have a mentor or somebody who will help you figure that stuff out. The people who I've come across that have some experience doing real trading, money management, marketsy type stuff, they tend to get a lot of these things far more quickly and are more successful in doing traditional marketsy type jobs. That has nothing to do with whether people are good at fundraising, marketing, sales. Running a crypto exchange is not a financial services job. I think most people would agree with that statement. It's a marketing, it's an asset gathering job in the same way that most pension fund managers are asset gathering jobs. That's a totally legitimate job in financial services. It's just not what I think of as a markets type job.
Okay.
I mean, people who work at the New York Stock Exchange, whatever, London Stock Exchange, are not traders in that sense. That's just not what the job is. That's fine. Right. So sometimes people get the vocabulary confused. Sometimes finances confuses vocabulary on purpose. Fair enough. But make sure you understand what you're signing up for and that you've got what you think is a reasonable background for that area.
So
if that makes sense.
it needs more TradFi guys, or it needs less TradFi people?
Well, I think the question of whether for the compliance side, you need more people with a more traditional attitude will be settled by upcoming legal action or the lack thereof.
Right.
That's always just a response to market development. I mean, you see people who come up with option payoffs that other people have seen 15, 20, 30 years ago.
Right.
And there's just a solution to this. And what that means is if you have the pattern recognition skills to notice, oh, this is basically that, but they're doing it wrong, you can take advantage of that immediately. At the same time, there are new ideas to come up with. Right? I mean, no one's ever run the equivalent of a Uniswap style AMM in traditional finance. There are some very good reasons to not do that,
Right.
but it has different properties. It's interesting, right?
Yeah.
So you need both, right? And you need a reasonable conversation back and forth. That's not, the idea that 100% of these people are criminals, screw them all. That's clearly, it's clearly not right. It's also clearly not constructive.
Right.
But at the same time, the idea that you have nothing to learn from some other sort of, that's crazy. That's not the way the world ever works.
Right. There's always something new, and yet there's always something familiar.
Yeah.
Okay. So, when you, obviously, crypto seems to have an image problem, right? In the general public, do you agree with that? And what can we do to change it?
Okay, so I think I'll push back on the first part of that for a second.
Okay.
I mean, financial services in general has not a fantastic image overall. I mean, people like the idea that you're a stockbroker is the butt of jokes, I think, in Dickens novels. Right? I mean, this is not an industry that has an unvarnished, wonderful reputation. I mean, financial services in general.
Yeah.
Right. People don't necessarily think people selling you life insurance are the most honest. Financial services has okay. Within that space, is crypto closer to penny stocks or, people at a brand name brokerage selling you brand name stuff?
Right.
Yeah, it's definitely closer to penny stocks, but The Wolf of Wall Street was a very successful movie about a true story about people who were all in traditional finance in that sense, right?
Right.
So I think maybe sometimes people could do a better job presenting themselves as, admitting there's a little bit of sleaze because finance has a little bit of sleaze and then dealing with it accordingly.
Yeah.
As opposed to a lot of people's attitude of, we're perfect, we have no problem, our financial position is strong. You go bankrupt 2 weeks later. Like, this is not helping anybody.
Right.
But a lot of that, I think, is honesty in both directions. Right? Don't pretend that you have some completely perfect thing that solved all of these problems.
Right.
You're, of course, inheriting some of the problems that all parts of finance have. Not to make it's not a false equivalence. It's an equivalence.
Right.
So yeah, it is a space that attracts more sleazy promoters than you see in normal finance. Look, the 90s had a lot of weird stock action going on in a lot of the world. So, but stop defending yourself by referencing that. Embrace the fact that this is a thing and try to manage it. That's the point there. Right. Stockbrokers are aware that their reputation is not fantastic and they manage it.
Yeah.
They don't just rail against, oh no, that guy is a criminal from 30 years ago. Ivan Boesky is not our employee. This is not useful. That's an 80s reference for people who.
To be fair, as a banker, as a former banker, always heard more lawyer jokes than banker jokes. So
that's another industry that does not have a spectacular reputation for the last couple thousand years. Yeah, that's fair.
So just building on that, you're seeing where finance is evolving, and there's a number of camps. They're like the blockchain is the future of finance, and then the others where it will never be what it is. And earlier Laksh talked about contradictions, like sort of at the heart of the matter, right? Decentralization, privacy, compliance, all of these things, right? Let's just take some of these one at a time, right? Decentralization and disintermediation. Is there really decentralization? I mean, there are a number of whales that seem to sway things one way or the other. So are we really truly decentralized?
Oh, okay. So, decentralization, this is a trade-off.
Yeah.
So there are systems, I guess it's sort of generally agreed the way Bitcoin operates now, there's no real central point of control. And there's probably no small group of people that could force a meaningful change. We'll ignore issues around the size of various mining pools because people can leave the mining pools. And if it was contentious, whatever. This is not a technical conversation about Bitcoin mining. many of the other systems extending all the way down to, products that are just a multi-sig. Right? There's lots of those around. We're not here to pick on particular products, but that's, that's the thing.
Right.
So yeah, there's clearly a wide spectrum there. And there are good reasons to choose various versions of those solutions. It's a trade-off like any other, right? What do you get in exchange for not having somebody responsible, in charge, central point of control, right? It is empirically true that you get at least some measure of lack of responsibility. Right.
Yeah.
So this thing empirically works for unrestricted cross-border capital flow.
Yeah.
It works at least in some ways, some products, there's no question about that. Whether that's completely legal or not, it depends on the use case or whatever is a completely separate conversation, and then you end up needing to bring in what elements of control and accountability are needed to manage that problem. I think the contradiction I find most interesting is people who will claim that they've solved XYZ problem through decentralization. One of the behaviors of that system, were it traditionally organized centralized system, would render it illegal. And then it turns out that actually they've just done the thing that makes them accountable in the first place.
Right.
And you're like, what are we really doing here? I mean, of course you have people who do bad stuff in all industries. Well, that's fine. But yeah, that contradiction I find funniest. There is a sort of tech optimism to some of it where, we'll do it slightly wrong, and then we'll fix it later. I did computer science graphics graduate school long ago, and the technical name for a demo where you were demoing a user interface, but the user interface controls weren't hooked up. Right? It's a Wizard of Oz demo. There's a guy behind the curtain who is operating the machine because you've designed the headset and the interface and the cursor moves around, but you haven't hooked up the program yet.
Right.
And Wizard of Oz demo is completely fine. But telling people that it's not that isn't okay. Right. And it's also easy for a user with some experience to demonstrate the fact that it's a Wizard of Oz demo. Right? You can catch the guy out. That, I think, is the problem.
Okay.
And it's okay to admit you haven't figured out how to solve the problem yet, but maybe don't process billions of dollars in production. I mean, that shouldn't be controversial.
Fair enough. All right. The next piece of this, disintermediation, right? Removing the middleman in things. Have we sort of transferred control from humans to faulty code with smart contracts and, sort of automated market making and all these other processes that run on the blockchain?
So stuff is certainly more automated in some ways. When I started, people would still do some trading over the phone. Mostly keyboard chat, but some over the phone and some screen, whatever. I mean, finance, not crypto things. But look, there's a famous Fisher Black paper from I think it is 71 or 73 about how you would automate the stock market.
Right.
This is not a new exercise. Right? It didn't take people that long after computers sort of were developed to realize that maybe you could do this. And you think about what stock trading volumes are, even you're doing billions of trades a day, those records clearly fit on what is now just the storage in your phone, right? This is not huge amounts of information going on. It's not recording, NSA style all phone calls happening on the planet at a time. It's a lot less data than that. So are there systems with different automation properties than traditional stock and bond markets? Sure. AMMs are a fascinating thing that can do some different stuff, some less different stuff. They change the accountability structure. And look, you go back to the way Bitcoin works, you're effectively trading off public publication of all transaction records for a lack of central control over which transactions get booked, right? Which trades get booked. That's an interesting trade-off, right? So what you've got here is market mechanisms that are opening up slightly different trade-offs. Right. So you imagine an idealized version of an AMM where there's no governance token, it's really just an X, Y equals K, whatever, some sort of function that runs completely autonomously. That thing has different properties than exchanges that we've had before. Right. Because I can set one up and stuff it full of a token I just made myself and try to convince people to trade against it, and no one can stop it. And unless you can identify that I'm the guy that sent that token in, I can swap it for dollars and get away with it. Sure. That's the bad case, but it's the simplest to explain. That's different, right? On a stock exchange, they have to know who you are, and they can cancel the trades afterwards. They do all this sort of stuff. Yeah, so that's a different thing. It's more automated, or at least it's different automation. Right. That's a good space to explore. It's not clear how big those spaces are. In the specific case of AMMs, it's become clear fairly quickly that there aren't that many different functions you want to use to run them, or they just end up arbitrable all the time, not very efficient, but expensive. Fine.
Got it.
But that fee model is different, right? The fees don't accrue to the shareholders; they accrue to the people who did the trading and put the money in. Hey, maybe that generates a more efficient system. I don't know. You don't get any interest in your whole. It's different, right? Finance is about, is this more efficient than that? That's markets are supposed to teach us that.
They're trade-offs. Yeah. So what about privacy versus transparency?
Okay. Yeah, privacy is challenging in the same way that I think the unrestricted cross-border capital flow comment from earlier is challenging. So when you have systems that are good at doing things that could be against the law, they're going to get used by people who are trying to do stuff that's illegal because the margin on crime is usually higher than the margin on legitimate business.
Right.
This is not, watch Narcos, right? The margin's pretty big in that business for reasons that I think the TV show makes clear.
Sure.
Right? So if you have a product that's good at concealing who you are, you're going to have legitimate use and less legitimate, good actor use, bad actor use, good faith use, bad faith use, whatever it is. That's hard. Whether on a civil liberties front, you think everybody should have access or not. This all depends on different countries and different rules, and it's all very complicated. And it's 200 countries and have different systems. Whatever. I do not have an opinion on how 190 whatever of those work. But recognizing that that's going to happen is because it's inevitable, right? It's important. And given the scale of the bad actors that have appeared in the space, hacks and money laundering, whatever, for state actor sort of level of stuff that various people do and don't like. Yeah, you have to know about that, be honest about that in advance and be prepared because you're going to get real scrutiny. Right? So the old finance training thing of, would you want this to appear on the front page of the Wall Street Journal? Right. If those are the people who use your privacy system, it will actually be on the front page of the Wall Street Journal. Right. That you know that with certainty because of the people who use it. And being prepared for that and making sure that, in fact, you really aren't accountable becomes very important. Right. If somebody is doing some borderline market manipulation, fraudy type thing in a trading pool, that's different than if your system helped to anonymize a 9-figure sum for a out of bounds counterparty, and the people who investigate it have different priorities. Right. So it's again, it's an acknowledgement of where we are, and that the tech optimism of, we'll pretend we don't have control, but have control and sort it out later. Right. That ain't going to work for you in that case. Right?
Fair enough. You can't hide behind the tech.
Particularly when you're talking about tracing electronic payments, the NSA or equivalent to whatever is going to be able to figure out what you did. So you need to be prepared for that in one direction or another. Yeah.
So, do you think it is the future of finance, the blockchain, and where do you see adoption in the next 2 years by governments, institutions, and retail?
Okay, so I think there's really, it's settled that for some parts of offshore finance, this works great, right? And there is a whole light gray area of offshore finance. This is offshore banking forever, for which this seems to work really well. Yeah. And I can believe there are costs. Decentralization. There are costs to having a more decentralized system. Every node on the network has to process all the transactions. Right. So that's going to be more expensive than one database. Yeah. There's no solution to that. Like you wanted redundancy, so you have to pay for it. I can certainly believe that running a system like that is less expensive than having fancy bank branches in tropical islands all over the world. And there are, I'll say, costs associated with maintaining those businesses, right? Whatever they are, and I can completely believe one is cheaper than the other for doing those things. And that's fine, because whether or not it would even be possible to eliminate that business outright, clearly no one is going to try to do it. So let's just accept that's going to be there. That's independent of whether you think it's good or bad. That's a statement that offshore finance is a thing. Now, so that part seems okay. Yeah. And as a result, again, you look at the way offshore money markets work, a lot of interbank activity for a long time is about, the Eurodollar market is dollars outside of the United States, or used to be. This is liquidity and greasing the wheels of the offshore financial system. So, okay, you'll have something like that. Onshore money market funds and whatever will be connected. That all seems pretty inevitable, given that this works for unrestricted cross-border capital flow and associated sorts of savings vehicles. And, similarly, people are always going to run Ponzi schemes on each other and scams, and that's fine, right? Pretending that you're not going to have Caribbean island headquartered fake hedge funds running Ponzi schemes. Like, of course, this is going to continue to happen. Right. No one really even wants it to go to zero. Like, what? That's fine. You do you. Yeah. It's a problem if that's the majority of the business, and it's looking like the onshore side, the Western retail investor facing, and I say Western, we'll come to the capital control countries in a second.
Yeah.
Western Europe, North America, no capital controls. So the legality of the payments part, there are at least ways it's clearly okay. You're going to need an interface that isolates the retail investor a little further from the offshore financial system in the way traditional finance has. That'll probably be the intermediaries accepting rules and restrictions, and then that'll be fine. And that will work the way it does now. I mean, if you buy a treasury bill in a whatever Western financial system thing out of your bank account at your broker, it's possible that exact bill was recycled through some offshore gray area stuff and came back. Whatever, that's fine. There's procedures, there's firewalls, everything's kind of okay. How this goes in a lot of the Latin America, Africa, East Asia capital control countries, foreign exchange control countries, is a bit less clear, right? So, I mean, Korea, was it just last week, 2 weeks ago, is starting to put out rules around stablecoin management because Korea has foreign exchange controls and has a long history of that stuff. Is going to be far more case by case because foreign exchange controls, capital controls are case by case, they're country by country.
Right.
And you're going to see stuff more or less adopted in different places in the same way that, people from certain countries have no trouble getting bank accounts in other places and other people have more trouble.
Sure.
Because of course you do, right? Even you're from Korea and you live somewhere else, wiring money is hard because there's restrictions. China has restrictions. Japan does not have these restrictions.
Right.
So you would expect the crypto economy to look differently in those two places, in part because getting money out of Japan isn't something that requires an obfuscation mechanism, whereas in some other countries it is. So you'd expect different user bases. Acknowledging that, embracing that, and dealing with it seems like the solution, as opposed to we're going to give everybody completely unfettered access to. All right, well, then you're going to get banned in that country. And, it's a realism thing more than anything else. But the cross-border part works.
Right.
And is plausibly less expensive than the alternatives and is a good alternative to the alternatives. If you're a user of offshore banking, you should want this as a separate sort of a system to help you have a more resilient setup overall, right? And there's nothing wrong with that. It's also no way to stop it. So,
well, but that's another paradox, isn't it? On one hand, we're talking about frictionless flow of capital.
Well, it's not frictionless. It's just,
fairly frictionless, but coming up against local regulatory, requirements. And what does this industry need to grow up? I mean, do we need more consistent or well-defined regulatory frameworks? Where do you see that coming along?
So I find this sort of particularly amusing. I know of a few cases in which a provider is aware that there is a way to do something under the existing rules and feels as though they will lose a reasonable fraction of their customer base if they take the position that these rules could always have been followed. We're submitting these forms. Here we go. Because the customers don't want to follow the rules because the rules have a cost. Right? I mean, I can understand somebody saying, if I can get away with not paying for this thing, then I'm not going to pay for this thing.
Sure.
And there is tension. There are definitely people in crypto, in some, it's generally larger and people with some more experience places that are aware that some of these things could be done under the existing rules. But if they, for example, were asked to, make markets a trade in whatever, some token, and went and submitted a bunch of registration paperwork, they wouldn't get any more customers. Right.
Fair enough.
I mean, that is, whether or not the submissions would work is an open question, but that nobody would try for that reason is unsurprising. All right.
Right.
Similarly, a lot of travel rule, KYC type stuff is, I would say, gray area, but some of it's pretty clearly not being done correctly. I mean, there's court cases where it's definitely not being done correctly.
Sure.
Maybe some more awareness that, there is a place for institutions here that actually follow the rules properly and wait. One imagines the reason that all the major Western asset managers with tokenized money market funds are fully whitelisted and have, 14 addresses holding their token in total is their plan is we have a revenue stream from somewhere else. Let's just hold the line until this other stuff gets cleared out and we can push the boat out a little bit.
Sure.
They're all going to get sunk.
Sure.
Right? That's clearly the strategy of a lot of these places.
Right.
Yeah. So you're going to watch that happen. Is that clarity? Maybe not precisely the route people are asking for. Like, you're not going to get a judge in any country to say this entire section of the government is irrelevant to you. You're exempt from all rules. Enjoy yourself.
Right.
It's just not going to happen.
Right. So where do you see, like, when you look ahead, to, like I said, again, the 2-year time frame, where do you see the blockchain making the biggest difference in the world of finance?
So there are plausibly more efficient ways, fractionalized equity and breaking stuff up, automated trading strategy things.
Yeah.
For security type stuff, for stuff that's currently traded under some regulatory regime with some of these schemes seem clever and people can try and run the stuff. Coming up with ways to do that are clearly compliant, so follow the rules, will be interesting. Look, a lot of the financial system makes earning interest on deposits and currency exchange and whatnot expensive for lower balance depositors. I'm not sure the correct term I'm supposed to use there, right? I mean, Citibank has had instant cross-border multi-currency for users in multiple countries for decades.
Right.
But that's not offered to lots of Western regular account, retail, whatever customers. Okay, well, having some competition that either gets them to do that or that just replaces the product, that's I think a social good overall. So you'll see products like that crop up where somebody says, I'm going to attack this specific problem. It's not even necessarily really a technology problem, but I'm going to fix that. Right. Some of the currency stuff, you can make progress, not because blockchains are better, because the bank is just charging you because it can, right? But it will allow you to put pressure on them and resolve those issues.
Right.
Fractional stocks just appeared fairly recently. This is the old problem where the ticker size is too high, the sticker price is too high, so people can't buy 100 lot or whatever.
Sure.
And Berkshire Hathaway has been issuing B shares that allow this for a long time.
Keep making it cheaper.
These are not real finance problems, right? Yeah, that kind of stuff has come on from pressure, different areas. So solving those problems seems very doable, legally tractable, solvable sort of things people can work on. While somebody else still does some of the cross-border whatever, those things will ease along. But it's going to be harder and harder to take retail money and funnel it into projects that are just designed to let you sell the tokens. And that's getting harder. Right. Yeah. Similarly, running exchanges that don't check who the customers are is harder and harder and harder. And, that's going to get run into the ground. But there are basic finance problems to solve here. Sure. Some of which are fundamentally political, but can still be solved with pressure through technology. Right. You can really solve that. Right? You can do better there. Yeah.
Well, one area personally I would love to see disrupted is insurance. I mean, really.
Yeah, I mean, that's another example of an industry where they're charging you because they can.
Yeah.
So I'm not an insurance expert, but I have insurance. It's clear that much like how the bank could offer you accounts in several currencies and just let you convert at the market rate at no cost to them, insurance companies could do a much better job in a number of areas.
All right. So now, just switching gears, I wanted to talk to you a little bit about Chain Argos, and so there are a number of players in the blockchain analytics space, right? Many providers. What makes you guys unique?
Okay, so we've come at these problems figuring out what's happening on a blockchain of data, right, from a different perspective. Right? So we didn't start from tracing where the money came from or went. Right? We didn't start from sort of the traditional investigation, money was stolen, how did this hack work type problem. Right? I was an FX person originally and sort of macro rates. We come at this from a much more macro perspective. So how many dollars are entering the system, leaving the system? Where are they going? Who are the biggest users of this thing? Now you look at like the inside cover of any macroeconomics textbooks, got all these countries and arrows back and forth for trade amounts, right? Yeah. Current account surplus and deficit, trade volumes, what products are going in which directions. Indonesia exports mineral resources and Thailand does manufacturing and the United States imports everything, plus capital and then recycles, whatever. Those sorts of flows are basic macro. And no one, when we started doing this a few years ago, was looking at that at all. I mean, no one was looking at Tether on Tron. Right. Lots of this sort of bigger macro questions. What are the average ticket sizes? How many users? Which stable coins go up and go down at which times? Who mints, who burns, whatever stable coins. So we started from that point of view, and that lets you see different things, right? You find different problems. I mean, we're known for identifying a number of sort of scam type things that were happening out in the open that were not hard to see once you added up the numbers correctly. And it's not that people weren't capable, it's that they were interested in, how do I find where the money from this hack went? And that's an interesting, useful problem that needs to be attacked. But we were looking at a very different problem, right? Where'd the dollars go when they left this? Oh, in aggregate, right? Why are there more here than there were there? That's a problem, right? Sure. So that helps you find sort of trading signal and other kinds of things, right? Protocol solvency. So these things are tradable. These things are interesting for investment decisions. They're interesting for counterparty credit management. And it turns out KYC. We never expected to do any of that kind of work. Right. But, it's a different perspective on that.
Sure.
So where exactly did these tokens come from? There. Okay. What fraction of the people who sent you money received money from bad people? Those are completely different KYC questions.
Sure.
But in a bank, you ask both of those questions, right? And as people get dragged into compliance with a lowercase c, I don't mean a specific program, but in general, you end up having to ask a number of different questions, and you don't expect to get a perfect score on all of those questions, but you need to not get a failing score on any of them. And people need different perspectives on these things.
Fair enough.
So we bring a useful, different view to the way we look at some of these problems.
So in a sense, you're kind of providing your lens on the fairness and sanctity of the markets.
Yeah. Okay. I mean, I'll give it a more sort of tech bro, whatever description. So a lot of tech products for the last couple decades have been based on a very winner take all sort of mindset.
Yeah.
Right? So Facebook ends up dominating this, and Google dominates this. And a lot of people seem to view there being a model for dealing with a particular blockchain problem that will take over and dominate that.
Right.
And I think that's a very tech perspective, not a very finance perspective.
Sure.
You need different automated market maker models working
It's an
together for
ecosystem.
resiliency. Similarly, when you're doing data analysis, you need a number of different ways to look at the problem overall. I mean, while it's a bit of a joke that all bank equity research is the same because it's all just, buy everything we list, bank macro research certainly is not that, right? There are strategists who have multi-decade reputations for always being bearish, bullish, and whatever.
Sure.
You need people to look at things in different ways,
Right.
and we're bringing a different way of looking at stuff, which is you're going to need many different ways of looking at things. And I don't mean opinions, I mean tooling, approaches, models.
Right. Yeah, there's a lot of data on the blockchain, and so you really have to figure out what are you going to do with it. Like it can tell you many different things. In fact, it can tell you too many things. You can kind of get lost in all the detail.
I mean, you stare at a tick data history of euro-dollar trades, and there's a lot of things you can do with this, probably none of which is useful.
Right.
There's a lot of information, and you need to find the right abstractions, cut things down correctly, and you learn the right questions to ask the longer you go at it. I started asking very traditional finance questions, and we now ask different questions.
Sure.
Who controls this multi-sig? That's not a question that exists in foreign exchange equity traders. It's not this is not a thing. Who controls this multi-sig in equity terms is who's on the board of directors, right? Whereas you actually might write software that recursively checks who controls the multi-sig, who controls are these the same people as that? Did they vote here?
Right.
Those are not things you could ever think to do.
Sure. They're blockchain specific questions.
Yeah. Well, yeah. I think at the moment they're blockchain specific questions. In theory, they could just apply to publicly visible databases that you could look at. But empirically in finance, they don't exist in any other context.
Okay. What about, we talked about the evolution of regulation. I mean, what role do you think you guys play in helping the market mature? Okay,
so we're a data provider. We're an analytics provider.
Yeah.
So the main thing that we offer people is what the truth is. They give you empirical truth, right?
Sure.
That's not opinion.
Yeah.
And ways to investigate for themselves what's really happening.
Okay.
That's a way to contribute to that, right? So we certainly publish stuff from time to time, talk to journalists. A lot of the time they'll come to us blind with something we don't know anything. And, that's the thing that's out there in the world, the truth of what the information is. That helps to move stuff forward. You certainly have, I think I've said this publicly a couple times, but you have some groups of people who are DeFi affiliated at the moment that are advocating for rules and exemptions for products that don't exist or that certainly aren't their own customers. That contradiction is not going to lead anywhere good for them because they're either going to get the exemptions and get excluded from them or get nowhere. Right. That's the way this goes. So we contribute by helping to show what really is, because what is the murder will out? Like you'll eventually figure out what's going on.
Right.
And because the data is public, I mean, you can see the pace at which governments are understanding things is accelerating. They're good at that, right? They have to be sure they know what they're doing, and then you just cookie cutter. So helping people to understand in advance what things are, what they aren't, is important. Yeah. That runs the gamut, right? We have customers who do trading, market making type stuff, and they're interested in, is the guy they're market making for, a guy or gal, although it's usually guy in this case, not okay?
Yeah.
Right? Is the small exchange that they need to do the market making on, is that insolvent? Right. You get those kinds of questions. You have investors who are asking if the people behind a given protocol have a bad history, or if they're being honest about their token unlocks or whatever. So that's truth at a narrower level that also just helps people to evolve and build stuff properly.
Right.
And then truth at a higher level of is this thing behaving the way it said it would with respect to some legally, politically newsworthy, significant event,
So what, and there are a lot of crypto OGs that don't like blockchain analytics because they feel like, they're being surveilled, if you will.
I always find this amusing. I mean,
what do you say to that?
the Bitcoin white paper makes a direct reference to this for a reason, right? So you don't have to be a very accomplished software developer to realize that if the records of the system are published publicly, people are going to read those records and do things with them.
Right.
And hoping that no one will do that is just childish. Like, I don't understand.
Right.
Now, I will say misrepresenting how reliable your attribution scheme is also not great. So this cuts both ways.
Right.
Right. If you're guessing, you're guessing. If it's probabilistic, provide the data, the evidence that the probabilities are high, it's reliable, the way the inference works, all that sort of stuff. But yeah, the idea that people aren't going to look at this information. It's hard to imagine anyone having a problem with downloading, such as it is, all the trade records and using it to design a trading strategy and running that trading strategy. Like, how anyone has a problem with that analytics, I don't really know. Similarly, if the police come to you and say, we arrested the guy that runs this exchange, we have the identities of the people that own all of these addresses, can you find where the money went? Like, whatever you want to work with, what are you going to do? Right? Clearly, those are answers. Now, inferring that this group behaves like this group and so they're the same person and this person should get in trouble for that stuff is very different.
Right.
That's far less, like in American
Defensible.
legal terms, it's the difference, between like probable cause and reasonable doubt. And so there, I think there are some problems in that space, and there are people who are rightly unhappy about that.
Right.
And I don't think that's being childish. Being unhappy about that, I think, is very reasonable.
Right.
Being unhappy that people look at the records at all. What are we doing here? It's what you only want to look at the exact UTXO spending and ignore the history.
Right.
The software was designed that way to make it efficient, not to obfuscate what was happening. The obfuscation is a side effect of optimizing for needing the smallest amount of data possible to perpetuate the transactions. Anyway.
So what about like the other thing when in the industry, people would always also say, again, the critics would say, hey, I'm really concerned about all this information being gathered because what if it ends up in the hands of a kind of a repressive government or something like that? Like, could it be used as a tool of state-sponsored repression?
Okay, so say a quote from The Godfather 2, right? Where I forget the Meyer Lansky character's name. This is the business that we've chosen. The trade-off that you've made is public transaction records in exchange for a censorship-resistant system.
Right.
Right. So Hyman Roth. So when Hyman Roth says to Michael about Mo Green getting shot, and I didn't complain, this is the business that we've chosen. Like that's the trade-off you made.
Yeah.
And an inevitable consequence of that trade-off is that there's a lot more public data that can be analyzed.
Sure.
No government is going to accept a restriction on itself to not analyze public data. That's nothing to do with surveillance and wiretaps. Internet is public data. It's on GitHub or whatever. That doesn't make any sense to me. Right. If you don't want that trade-off, that's fine. Then you're going to have to go design another system that manages to achieve the censorship-resistant properties. And if you can do that, clearly people will be interested in talking to you.
Yeah.
I mean, spoiler alert, I don't think you can do that, but all right.
So, by the way, for those who don't know, John and Patrick have a weekly YouTube podcast in Chain Argos, and they're kind of like the crypto versions of the Mythbusters. I'm not sure who's who.
We don't have as much facial hair. That's
for sure. But in each of those episodes, they're always highlighting something that is like a current topic that is relevant. And then they dissect it using a combination of data and their respective expertise. Now, what's the inspiration for this channel?
Okay.
And what do you expect to or hope to achieve with it?
So it's a great way for us to organize what we're looking at, right? So people, you read a lot of news and I remember it's pre-Google, right? 15, 20 years ago, you'd have to keep bookmarks for 10 newspapers to get different opinions on things. The Sydney Morning Herald. I actually used to read the Straits Times a very, very long time ago because there weren't that many English language newspapers in this part of the world. That
Sure.
but the Bangkok Post and this were quite reliable. Anyway,
Yeah.
this is really 20, 25 years ago.
Right.
I had websites. Organizing that is hard, particularly now with the volume. And we'd realized quite a while ago, crypto, the volume of stuff that comes out is so high. And you're never going to read everything. You're never going to follow everything. We do get requests and queries and pointers from people, but it forces you to do some triage, right? It's a good organizational tool, right? So I was telling you earlier, the podcast is great for us as an organizational tool, read stuff. I think people should do this. Again, I don't necessarily think you should publish it. The world does not need more podcasts. There's one thing we're not short.
Are you sure about that?
But it's helpful to do the work, the research, the reading, just to force yourself to cull it down to a few topics.
Right.
We try to do 3 things a week. Maybe there's 5 or 6 on the list, and a couple get, one gets moved to the next week, 2 get deleted, whatever. That forces you to do a little bit more digging than just reading a piece and thinking, oh, that's interesting. Next.
Right.
So you read, you bookmark, you write stuff down, you recover, you stick it in a whatever reader app or something. That's been great. We get some feedback. It's helped us a lot structure our arguments with each other, for others, to dig through things. And it just makes you sit down and do the work because you have to organize your notes. You've clearly had this experience where you take notes in a meeting and you think you're good.
Yeah.
Okay, now you go sit there and you have 8 minutes on camera. We don't ever, it's Top Gear style, right?
Right.
We'll fix that in post. There's no post. You actually have to take sufficient notes that you can do it that quickly. And that helps a lot. You do that over and over. You just get better at presenting and making the argument more quickly, which is helpful talking to people. We go give customer presentations on the laptop and now I know exactly what to do now because I've answered a very similar question before.
Right.
So it forces you to.
Right. So when you guys are picking topics to talk about, it's quite a gamut of topics, right? Wells notices and Korean stable coins and Cumberland and things like that. Like, how do you decide which this is really relevant, and is the objective of that topic to drive home a point?
Okay, that's fair. So we try to do stuff where, in particular, data and our approach on data can help. So we looked at something last week, which was about where the line sits for market manipulation.
Right.
And here, there's not actually that much data, but it's in some obscure corner you got to go get, and you can present it in ways that really draw out the question very clearly. And we do this a lot, where we'll show minting and burning histories, percentiles, transfer sizes, whatever. Some relatively simple statistical measure or chart that helps us to illuminate something, right? We don't do that all the time every week because that would be incredibly boring. And there's a lot of interesting sort of higher level topics there. So Patrick's a lawyer and I do some academic computer science research, crypto related stuff. So we both have, as a result, different, sometimes similar opinions on regulatory and legal and other topics. So we try to get involved in that. There have been cases where there was some kind of a legal development we saw, and we wanted to communicate that we felt the data or the investigators had maybe missed something or not done something quite the way we would have. So we'll work through that. Sometimes we'll talk about that on the podcast and also communicate with the relevant person. Sometimes not. We, have lots of email addresses. So it's useful for that to help draw out the argument and explain things, particularly if it's a public document and you're commenting on a public document. It's perfectly fine to do that on your podcast. And some of this stuff is just amusing, right? Crypto has so many interesting accidents that are, funny to watch. We had a reputation on Twitter for a while of publishing explanations for why things blew up after they blew up. Right. And this is somebody I remember responding to me with, why don't you say this beforehand? Well, that's no fun. Right? It's not like his markets is not a public service. It's just not, right? That's not the way this works.
Sure.
So
fair enough. So, one of the topics that I thought was particularly interesting was what you call FBI coin. And that's the FBI, just by way of background, the FBI launched its own token in order to detect market manipulation in the crypto sphere. And it's called Next Gen AI. And, really quick thoughts about that, but I know we're almost out of time.
So I'll come to the legal question in a second, because I think it is fascinating what happened there. Yeah, so that's one where normally you look at some data and think, oh, this is manipulation. This looks fake. Here, with certainty it was manipulation because the FBI paid these people to manipulate it and then arrested them for doing so. So that's great data because very rarely can you look at a stock and say all the trades here are manipulation trades.
Artificial. Yeah.
Right. And then you could look and we could show that the measures we normally use to detect manipulation are flashing red manipulation for this thing that we know with certainty is manipulation.
Right.
You don't get these kinds of case studies
Right.
in the real world.
Pure manipulation.
Yeah. I will say on the legal front, I only know entrapment is a thing because it was a terrible movie 25 years ago?
Connery, yeah.
Entrapment is a thing where the police try to get you to. I have no idea whether any of this stuff is okay. It seems a little bit too cute. The FBI can call up and say, I've created a token. It's a security. Can you manipulate it for me? But maybe I genuinely don't know.
Sure.
If that is a thing that works, you kind of have to question why that wasn't done a long time ago. But it's funny, right? You get unique stuff.
Absolutely. And, if there's one thing you can say for sure, there's no boring day in crypto.
Sometimes it's repeated, but it's at least still funny.
That is true. Well, there is an element of Groundhog Day in some things. John, we're out of time. This has been a fantastic conversation. Thank you very much.
Thank you.